Welcome back, Cool Cats. We've got a lot of potentially money-making setups to cover today on everything from SPY to precious metals to TLT to energy and to the Mag 7, including a tech company despised by Wall Street that could see over a 200% return in the coming months. For a quick recap, Dixie broke out of this falling wedge. Google broke out of the symmetrical triangle. TLT hit the profit target around 94. And Tesla is well on its way to profit target that we've previously covered. The question is, am I going to be right about what I shared about Apple as well? And we're just about to dig a little deeper into all of those. But I gotta say, I share all of these setups on social. StockTwits, X, the YouTube community tab, or if they're multi-week patterns, sometimes I don't revisit them every video, so please subscribe and tap those notifications so you don't miss all of these amazing setups. And feel free to go back and watch previous videos for what you may have missed. So looking a little bit deeper into Google, we can see how it had this breakout of this symmetrical triangle pattern. And that pattern is targeting somewhere around 220. You can see this measured move here. However, it does have to break above this main resistance line that you can see on the weekly time frame has been a pretty hard line to get above. And even when we got above it for, a couple of months, we still came right back down below it again. So what I'm looking to see is if this ascending channel in yellow actually comes back to life and holds up. And if it does, we could see this pattern target potentially get met somewhere around like the middle of January. And we never rule anything out, so there's always the possibility that this was actually a false breakout of the symmetrical triangle and we're actually about to head way back down. But for now, let's just try to be bullish. This main resistance line in yellow absolutely held up, so we got our pattern target around 94, and you can see we had a well-defined descending channel, broke below the channel, clawed our way back up into it just a little bit, and then just had a waterfall event. We're now below this previous trend line. It could act as resistance, but if we could get back above it, it could now act as a very strong support. Always keep in mind that patterns, the trend lines, whether it's the support or the resistance, we always extend them out because previous resistance can begin to be new support, and extended trend lines can have significance. So this previous support line here, we extend this on over, we could potentially see a bounce on TLT somewhere between around 89.30 and potentially like 89 to 90, somewhere in this range if we can't get above this current resistance right now. And the one thing that I'm really paying attention to is this RSI pattern. This kind of looks like potentially a falling wedge or maybe even a descending triangle, but either way, this is indicating more likely, this is some bullish divergence definitely compared to this slope here. This is indicating that TLT is wanting to break out shortly. But at this time, there doesn't seem to be any well-defined upside target. And it's going to be highly dependent on what Dixie does, which we're going to get to in a little bit. So I've shared this pattern on Tesla before, this symmetrical triangle, and we can see that we had a bit of a false breakout to begin with. We pulled back, we basically had kind of a weird double bottom here, and then we had the real breakout after the election. The breakout target was only around 466 to 467, and you can see in this well-defined ascending channel right now, Tesla could potentially even meet that pattern target, on or around the 18th, which if you've been following along, you know the significance of that date. And if you haven't been following along, we're going to go over it here in a little bit. The one that's really on my radar right now, because it's actually getting a little bit overextended and much more likely to be shortable, is Apple. I shared before, it looks like there is the potential that we've got 3 impulsive moves up, and this could be the end of this third impulse. You can tell each impulse up had a little bit less oomph to it, and now we're at the final stretch, potentially right below this main resistance line here. So what I had shared is that I'm looking to see Apple come up to around somewhere in the 250s. At this point, it might be around 256, 257. It depends on where it hits. But if it can get up there, and I think it really possibly could, that's where I would potentially be interested in grabbing some puts. And this is obviously not financial advice. I'm not recommending to anybody to do this, but what I look for is I look for liquidity inputs. I like a small bid-ask spread. In my personal opinion, I like nothing more than like maybe a $10 spread at max. And for something like this that took multiple months to set up, I would want to grab something that likely, doesn't expire for multiple months, even though we're technically still in a bull market right now. So I would not want to hold those long term. I would want to try to essentially scalp, let's say, scalp's probably not the right word, but let's say swing it over the next few days. If it does reject off of that, you could potentially catch a move from around 256, 257. If it came all the way back down here to this level that was very difficult for it to break before, we could see it come back down to about 236, 237. So, like a 20-point move on a put, that's a decent amount of money. And to add just a little bit more confluence to it, you can see this RSI symmetrical triangle pattern on the weekly time frame. Look how close we are right now to this resistance. So historically, a lot of times what we see with these symmetrical triangles is we have a false breakout. So I could actually see it pushing slightly above this resistance just to fake people out. It might even slightly peak or wick above this resistance. But if it holds, that's when we're going to see it come back down. And if there were some sort of catalyst that could cause Apple to break this main support line, we could see it absolutely come all the way back down to somewhere around 200. One of our viewers requested an update on SLV for silver, so we're going to get right into that. So I had shared many videos ago that there appeared to be the symmetrical triangle pattern. This is like a multi-year symmetrical triangle pattern on silver, whose target is targeting somewhere around $63 a share. And we can see we got the breakout of that main resistance line here. We got a pullback, confirming it as support, and we began pushing back up higher. And it was doing this inside of this pretty well-defined ascending channel until we broke it. We came back down, came back up, retested it, showed that it is now resistance. But we've been consolidating in this area here. We had a bit of a bearish divergence here. Lower high versus a same high, kind of like a double top. And that's what pushed this down. However, we're already in kind of an oversold condition on the 2-hour time frame, as well as on the 4-hour time frame. So there's a potential that from this support level, we could at least see a minor bounce. I am keeping in mind, though, that there's plenty of room on the RSI to come down on the daily and the weekly time frame, but we could also potentially view this as a double bottoming pattern on the RSI. If that plays out, we could absolutely see SLV continue to push higher from here. But it's kind of hard to know what silver is going to do without looking at gold. So we're going to look at two different gold charts, and then we're going to take a look at Dixie, which kind of has a lot of sway over all of it. So we'll look into GLD and GOLD and then the Dixie, and then we'll hop over to SPY and QQQ. And we can see on GLD, it was in this very well-defined ascending channel for multiple weeks. We broke below, came back up, and right now this appears to be a bit of a triple top. However, we are making higher lows, which is a bullish sign. And one of the things that I share from time to time is what's considered a hidden bearish divergence. Some people see this as a bearish sign, but in my opinion, it often leads to longer-term bullish upside. So here we made a higher high on the RSI, but here we made only just a smidge slightly higher high there. So a lot of times what this indicates is that the bulls got really ahead of themselves. They really had to fight the bears to get it up to that level. So we get a pullback because we get an exhaustive pullback. But then from there, there absolutely is the potential to move higher. When we look at the chart of GOLD for Barrick Gold, you can see this is all the way on the monthly time frame. There is this level somewhere right around $14 at which you're either above it or you're below it. It's kind of that key pivotal point, and this whole area here, as long as you're above it, is a demand zone. When we zoom into the daily, we can see that gold has been in this pretty well-defined ascending channel. We had numerous touch points up and down, and right now we're basically touching that support line. We touched it the first time, we bounced. We touched it a second time, we bounced. We're now stuck between this resistance line and that support line of the ascending channel. So if we were to break resistance here with a measured move, we're basically targeting this previous resistance. So somewhere between like 19 around in that area. And then if we were to break support and we come down, it's going to be putting us in this demand area, this demand zone. And there's also an actual support level here, right around 1460, 1470. So even if GOLD comes down, it's going to be in an area where buyers have been known to be found. But in my opinion, what's most important right now for precious metals is what Dixie is doing, and we're getting into that right now. So I shared before that Dixie looked like it either could be setting up a head and shoulders pattern or a falling wedge. And I was really leaning more towards the falling wedge just because of the angle of it and things I was seeing on the RSI. So we can see we have a confirmed breakout of the falling wedge. It's still targeting somewhere in the 108 area, which could meet this previous high here. And we've got a well-defined ascending channel. And I don't think it's just a coincidence that this channel is indicating that we could meet that pattern target somewhere around the 18th or the 20th, depending on where we actually hit there. What AAPL and Governor Ueda do this Wednesday, the 18th, is going to have huge implications for bond yields, the dollar's strength, and everything. If the Fed cuts rates at the same time that Japan raises theirs, we could actually see dollar strength start to tank and could potentially see almost like a repeat of the August 5th fiasco, the yen carry trade. And some would argue that conditions aren't the same, but I mean, it's definitely a tail risk. And as far as precious metals go, personally, I wouldn't feel safe or comfortable going long precious metals until Dixie has met this target. Because as dollar strength continues to heighten, other countries are struggling, which is headwinds against equities and against commodities. As I shared last time, the VIX is also indicating that something is very likely to happen this week, and volatility is very likely to break out. This is targeting somewhere around 2050 to 20. And we could even see on the ADD that the overall market, not just the Mag 7 and the big names, the overall market was in this ascending channel, and we broke below that on the 12th, came back up and retested it. So whether it's short term or long term, at least right now, the overall market is not in this ascending channel. It's not in that uptrend like it was before. Looking at SPY, I had previously shared the symmetrical triangle, and that pattern target is somewhere around 620. And this ascending channel that it's in right now is indicating we could meet that pattern target on around 18th, 19th, or the 20th. So there's so much confluence in the market right now, it's insane. And last time I had ported out the symmetrical triangle pattern even on the RSI, we had the false breakout like we frequently do with symmetrical triangles. We had a pullback down here, but we can see the actual price on SPY barely moved down, which is a very bullish sign. And there's the potential that this could end up forming a double bottom because we do have bullish divergence here. And on the bearish side of things, we did have this ascending channel that we broke out of and then we rejected off of it, but now we're kind of just trading sideways. And in a bull market, usually, but not always, trading sideways means consolidation before another leg up. Taking a quick look at QQQ as well. If you don't know the significance of this particular ascending channel, please check out my last few videos because it's extremely important, and stick around because we're still going to cover that tech company I mentioned at the beginning of the video. And obviously this is a pretty busy chart. There's a lot going on, but the main thing that you need to know is right now QQQ is in this ascending channel in this light green color, but there is this main resistance line here and here, both in light blue and yellow. So there is a crap ton of resistance right above QQQ. So could it push higher? Yes, it could. But if these resistance lines hold up, what we're actually likely to see is a coiling of volatility in QQQ leading right up into the FOMC decision. And you probably don't need me to tell you, but that is going to be major market moving alongside the Japanese interest rate decision. And there's different ways of interpreting it, but if you join this yellow line here, as well as the bottom support line of this ascending channel, one could argue that that's forming a rising wedge on QQQ. NVIDIA has been showing some weakness as of late. You can see how we broke below both of these main support lines, seemingly treated this as resistance now last week. And we've also got this RSI pattern. We got resistance up here, support down here. If this holds, if strength comes down on NVIDIA and this comes down to this support here, what we might see it meet price on the actual chart is somewhere around 122, 123, 124, somewhere in that area. But it is important to note that we have a pretty strong bullish divergence on the main chart here. We've made a significantly higher low. This is on the 4-hour time frame, and we've made just a slightly lower low here on price. So there's a definite possibility that this bounces back from here, at the very least, it may come up and retest this and see if it's still going to act as resistance, somewhere around 143. I had to share this awesome update on Amazon as well. This is on the 4-hour time frame. A lot of times these shorter term channels, they only have a few touch points on the upper and the lower points, on the resistance and the support. But if you draw this on your charts, and if you like swing trading or if you like scalping, I think there's a definite possibility that if Amazon comes up to somewhere around 236 to 237, if it touches this line, if you grab puts and scalp it, you can make a lot of money there. If you come down and it touches support, especially because this is an ascending channel, it's a bullish channel. If it were to come down and touch support around 210, 211, 212, somewhere in that area, wherever it hits, you could grab calls potentially and make money there. I would say probably longer dated calls, because this is a bullish channel. It's much more likely to go up than it is to go down. Obviously, that's not financial advice, but this is the way that I'm looking at this chart right now. This is our last ticker before I get into that tech company. And if you think you know which tech company I'm about to cover, please leave a comment down below, or feel free to chime in on anything that I've covered so far. So taking a look at Exxon Mobil, oil and gas has been kind of beaten down as of late. This is zoomed all the way out on the weekly time frame. We can see we had a kind of a demand zone here, a supply zone there, which could now actually act as demand because we're above it. But the main thing that's on my radar right now, this is on the daily time frame, you can see we have numerous touch points for this main support line and numerous touch points for this resistance line. So right now, volatility on Exxon Mobil is squeezing, and we're getting very close to touching the support again, as well as this demand zone. And we're currently inside this pretty well-defined descending channel. You can see we just have so many touch points. We keep going down, down, down. But I have a strong feeling that when we get to right around 106 to 107, this is where we could potentially see a pretty strong bounce, carrying us potentially all the way back up to like 125 to 126. And it really depends on what's going on in the global stage, but at least technically speaking, this area could be an amazing buy zone. Of course, we have to look at the bullish and the bearish case. If we were to break this support line, it would put us down into demand, which could come all the way potentially down to around $96 a share. But even then, even if this held up, we could then potentially see it start to push back up. All right, the one you've all been waiting for. Let me know if you guessed it in the comments below, but this is Intel. There appears to be a lot of confluence on the charts and potentially even fundamentally. So let's get into this. We can see, and this is on the monthly time frame, that we had a very well-defined ascending channel that Intel was inside of for many, many years. And we got up, almost touched previous all-time highs, had a bit of a double top here, and finally broke the channel. And we're going to zoom in here, but I want you to notice these different demand and supply areas. When you're above it, they act as demand. When you're below it, they act as supply. We've got one here, here, and here. When we broke this channel, we came down and we formed a new descending resistance line. You can see once we got here, we broke down, we came back up, broke down again. But we appear to have both a descending support and descending resistance line. This support here lined it up with the demand zone, so we got a pretty good bounce after this double bottom. And then even before that, when we just barely touched this demand zone, we kind of consolidated there for multiple months, bounced back up, hit this resistance line. We just kind of wicked above it and shot back down off of this resistance here. So we are getting a coiling and volatility for Intel right now. So we can look at this potentially as a falling wedge, or just as a wedge in general. Due to the angles of it, it's not as clear that this is a bullish falling wedge. So there is the potential this could go down rather than up. But one thing I'm keeping in mind is that the US government is really wanting to start using US made chips. They're wanting to start having foundries within the United States. And Intel has been a big beneficiary of this. There's even rumors of potentially NVIDIA possibly buying Intel. I don't know if that's true or not, but there does seem to be a confluence of reasons for Intel to potentially go bullish at some point. So I've got to zoom all the way out to the monthly to show this. But if this were to break out to the upside, if this support and this demand area act as support, we could see Intel coming down somewhere between like 17 to 19, maybe even 20, and then breaking out and hitting this previous resistance line somewhere around 41 to 42, depending on where it hits. Essentially a 200% or more move to the upside. Now, alternatively, if this does break to the downside, if it breaks all of that support and comes down, it would really, this $12 area is a very, very strong support area as well. But if it could break it, it would be targeting this previous demand zone right around $7 a share. So obviously we don't want it to go down there. Unless you're shorting it. But let me know your thoughts on Intel in the comments below. I'm curious to see if most people are bullish or bearish on it. And I have to mention, the debt refinancing window is coming up for trillions of US dollars. Businesses thought that the Fed would have cut rates more by now. That, as well as a strong dollar, could absolutely be headwinds to the market. And you got to keep in mind what I've covered in recent videos, though. The technicals are indicating that we could potentially continue to grind higher into the end of 2026, but could also see 5 to 8% corrections, or at least one of them, on the way up. As always, nothing I've shared is financial advice. If you got value out of this content, please share it with somebody who might benefit from it. I want to say best of luck, cool cats. God bless. And here's today's trading rule to live by.